Welcome back to the Dividend Diplomats YouTube channel. You've got your boy, the Ohio State, Mr. OH,
IO.
Bert the Hurt, and you're rolling with Lanny, the Dividend Diplomats. And guys, we just finished off another week of buying dividend stocks.
That's absolutely right, Lanny. But everyone, before we get into the video and we start talking through it, smash that subscribe button. Give this video a thumbs up. Turn it blue. Thanks, everyone, for your support. We appreciate it. We keep growing. You keep growing. All of our passive income keeps growing, and that is the name of the game. So, yeah, our goal was to buy income-producing assets consistently and grow our dividend income. That's why whenever we can, we like to record videos discussing our weekly stock purchases so you can see that we're not just talking and putting out watch lists and just trying to get views on our channel. We're putting our money where our mouth is and buying the stocks that we are talking about because we want to help grow our income and yours. It's all about spreading the news of dividend investing.
We keep it transparent, baby. We want to let you guys know where we're putting our money. Obviously, make your own investment decision, but at least we're showing you what we're doing with our capital. Now, for those that haven't paid attention, the stock market was down, about 100 points or about 2% the last week, really wrapping up November and entering December. And what's interesting is November was actually a down month in the S&P 500. They were down, I don't know, about three or so percent for the month, right, Bert?
That's right. And the major story is obviously the Omicron virus here that's coming up with COVID. So I think as once we start seeing the impact, the market's going to have some fluctuations going up and down every single day as we look to see the impact. Everything gets assessed while we also get our hands around inflation and some of the other macro events that are going on. But the good news is those fluctuations present great buying opportunities for us to put our cash to work in buying undervalued dividend stocks.
And I want to point out, Bert and his wife, they use Fidelity to buy in, their dividend stocks. My wife and I, we currently use Allied. So for those that are listening, if you have a platform that can handle automatic daily/weekly trades, plus can handle obviously your IRAs, as well as the potential 529 account, all automated, please share that feedback in the comments because I've been dying to figure this one out.
And his quest for a new brokerage, all-inclusive brokerage account will not leave any stone unturned. So help us keep looking for some new brokerages that he could potentially consider. But all right, so the people are here, Lanny, to hear the stock purchases. Why don't you kick it off this week, Lanny? Why don't you talk about your first purchase?
All right, let's jump out the gate here. We're a couple minutes into the video. So guys, November 29th was Monday. And if you don't know, my wife and I buy weekly stocks. We have not gone away from the strategy of buying Vanguard's high dividend yield ETF. We are now, going on over 16 to 17 months of consistently buying Vanguard ETFs. And this was no different. We each bought 2 shares of VYM. I got it actually at $109.06 on Monday. And my wife was lucky. She got it at $108.06. So a whole dollar cheaper. We both added, in total, I'll say $12 in forward income at an average yield of about 2.75%. Total capital right there on Monday was $434. But as the market was coming down, I actually grabbed one more share for my portfolio. I bought one more share of VYM ETF on Tuesday at $106.55. So in total, we invested $541 and we added a total forward dividend income amount of about $15 at an average yield of about 2.75 to 2.8%.
Perfect. Just like clockwork. What's funny is started out Monday at 109.06. This is just showing what happened this week in the market. Your wife picked it up on the same day, $1 per share lower at 108.06, and then you pick up one more share the next day, $1.50-ish lower at 106.55. It was a crazy week in the market. Well, nice job, Lanny. That's how you keep the consistency growing. So speaking of the consistency, let's go into our first purchase. This is an interesting week, and I'm pissed off looking at it in hindsight. As you guys know, my wife and I always buy 1 share of Johnson & Johnson each. We love the Dividend King. We always talk about it. We're pumped up even with the split off that's happening. So I logged in Monday. I grabbed myself 1 share at $159.50, added $4.24 of income at a yield of 2.66. That's kind of been where Johnson & Johnson's trading over the last few weeks. Pumped up to grab it over 160. And then I stopped. I forgot to put the purchase in for my wife. No purchase of Johnson & Johnson this week.
So Bert, why don't you have an automatic trade set up for Heinen or for Fidelity, J&J?
I'll tell us in the comment section. Everyone get us that brokerage in there, help us out. It was a miss, but we've also picked up a few extra shares of Johnson & Johnson above and beyond our 1 share per week. So it sucks in the long run. It's not going to matter, but you bet that I'm not going to be missing this for a while now. So it is what it is.
Bert, can you do it on Fidelity? Can you set up an automatic taxable trade?
I mean, probably if we'd start digging deep enough, but I thought you had to buy one of their mutual funds. But that's a different story here. We're not going down that road, everybody, right now. We're going to keep moving through our stock purchases. Lanny, why don't you tell us about the second stock you purchased?
But I haven't caught the blog article on the last purchases video. We also set a dividend REIT investment strategy going forward, really starting back in November. First I did a nice deep review on Store Capital, ticker symbol is STOR. So I've been buying Store weekly now, trying to get to 100 shares of Store Capital Dividend REIT. Then for my wife's account, we've been buying her preferred apartments communities, ticker symbol APTS. Now these are dividend REITs. Obviously they're taxed at your ordinary income rate, but you can offset some of that income with the qualified business income deduction. Consult obviously your tax advisor on that. But we wanted to add some REITs to the portfolio, really on the taxable side outside of the Fundrise investments that we have. So we've been buying shares. We've been buying about 5 shares of APTS weekly for her and about at least 2 shares of Store Capital for me. So to get into it, for her, we bought 5 more shares on Monday of preferred apartments at $13.68. Total capital was a big $68. Invested, adding $3.50 at 5.12% into preferred apartments. Again, ticker symbol APTS. All right, so this is going to be a quick one. So with Store Capital, I bought my 2 shares on Monday at $33.40. But then I bought another share the next day at $33.27. But I wasn't done yet. I bought 1 more share on Thursday, December 2nd. I bought 1 more share at $32.43. So the price kept coming down and I kept grabbing, a share here and there. Bert, were you about to say something?
No, I was gonna say that's the beauty of this strategy here. You've done all of your research up front for Store. You like the company, so you obviously looked at it 33.27 when you started, or 33.40 when you started the week. So while it's falling, it's a great stock. Why not keep buying? That's the beauty of this automated, consistent strategy. So heck yeah, nice job on that. Keep adding that income.
Yeah, and they've increased their dividend during the pandemic. They're a younger public company, only public about 7 years, increasing their dividend every year. But in total, again, I grabbed a total of 4 shares of Store Capital, investing $133 when you round it. And I added approximately $6.16 at an average yield of probably around 4.65 to 4.7% of Store Capital.
Fantastic, Lanny. All right, so we'll move into our second stock purchase. This one is in my wife's portfolio. If you've noticed, we've been nibbling on this position over the last few months. We've been slowly but surely building her position in Unilever, ticker symbol UL. We love consumer staple stocks, and this isn't the cheapest stock, but it's not the most expensive either. We've always liked them because of their brands that are on the house. So just to name a few of the brands, they've got Axe, Dove, Ben and Jerry's. It's a little bit all over the place going on their website, but let's see, 7th generation. They've got Vaseline. So a lot of good stuff, a lot of reason why we like Procter and Gamble, and we just like buying stocks where things can be found in everybody's household. That being said, we're pumped up to keep building this position. So on the 29th, on Monday, we added 3 shares of Unilever at $52.39, which was $157.16. Their dividend yield was about 3.8%. It's always slightly different what Unilever's actual dividend is. So based on a few sources, we calculated 3.8. Next day, much like Laney's store capital story, what he was talking about, price fell. We added 4 more shares to her position at 51.15. So dropping $1.24 right there. Added in $204.60 to her portfolio, or $7.96 to her portfolio. So in total, 7 shares of Unilever, adding in a calm nearly $14 in dividend income at a yield that's just under 3.9% total. So it's exciting to keep building that position.
Just stacking great consumer branded companies right there. Yeah, adding $14 in forward income. That position's got to be getting pretty big, right, Bert, for Unilever?
Yeah, no, it's growing up in there, and we'll put down on the screen just how many shares we have right now. I'll make sure to give you the actual number in there for the video. So just keep looking at the bottom. That'll be how many total shares we have. But yeah,
any goal in mind here, or?
No, I mean, I think it's just growing. I'd love to get around 3,000, 4,000 total for the position, however many shares that calculates out to be. But I mean, in the long run, it to me is a long-term play. We want this position to be producing income for decades, and a company like Unilever is well positioned to do that.
There for decades, you're like for millenniums. Big, no, great. That's sick.
Yeah, millenniums would be awesome if that were the case, right? That was the goal of all these stocks.
That's right. Buying dividend growth stock. So to get into my, again, we talked about Vanguard's VYM. We talked about store capital and preferred apartments. I bought one more share. It's a fan favorite lately of the dividend investing community. I bought 1 share of Lionel Basel, ticker symbol LYB. I know everybody loves this high yielding 5% plus chemical company here. I bought 1 share on that Tuesday at approximately $86.77. Really love this company under $90 personally. I've owned them for quite some time. They continue to do very well from a dividend growth standpoint. This added $4.52 to my forward income total at an average yield of 5.21%.
Yeah, their metrics look awesome. So it's nice to keep grabbing it. What your video, when we did it like a couple months ago, and the metrics are still holding up the same. It's still P ratio in the single digits, great payout ratio. I mean, the yield's phenomenal with their dividend growth. Yeah, I can easily see why you keep adding 1 or 2 shares over time to Lionel Basel. Fantastic.
But Bert, I know you weren't done after Unilever. No. You bought J&J, you bought Unilever. What's the triple threat that you have coming in?
All right, and then for my wife's portfolio, again, we've been building her position in Intel, ticker symbol INTC. Intel is very appealing to me right now, as they've dropped after their earnings release. They're coming down from some of their highs over the year, and they are now below $50 per share. Again, we know some of the struggles Intel's gone through with their chips, with the shortages, and we know how they're working to address the long term by building their own production facilities, and they're well positioned to do with all their cash and their position in the market. That being said, I'm taking advantage of this downturn to keep building my wife's position. On the 30th, we bought 3 shares of $48.92 for a cost of $146.75, adding $4.17 of income. The yield was about 2.84%. And then at the very end of the week, it was an interesting week. I just wanted to keep pushing more money into our thing, keep growing our income to get us that much closer to freedom. Just keep doing it. So we added 6 more shares of Intel at $49.03 for $294.50, adding $8.34. So in total, Intel, we added $12.51 of dividend income related to Intel. And why I picked 6 shares, I was staring at our brokerage account. We had 44 shares and change after some dividend reinvestment. Just wanted to push it over 50.
50 inches, 50 shares, 50 shades. What's going on here? Intel, INTC, and hey, they're doing everything they can from a supply chain standpoint. But man, congrats! It's almost $50 invested into Intel stock.
Yeah, I mean, we'll keep going if we keep seeing that they're showing signs of undervaluation. So, what was your last purchase of the week here, Lanny?
My last purchase, and it's because I want to get to a certain number of shares of this company, and it was from the spinoff from Pfizer, Viatris, ticker symbol VTRS. I have like a goal of getting just to 150 shares, and just, hey, then I'll see kind of how this company actually does. I'm at 139 shares after this week of purchases, so I'm just about there. I mean, if they stay at these prices, I'll probably hit it possibly this week. But again, I bought 5 shares on Monday. I bought 3 shares on Tuesday, and then I bought 1 more share on Thursday. It kept falling from 1287. I got it at 1229, and then I got it at 1206. So the total capital for these 9 total shares that I bought was only $113.30. And I added a whole $3.96 in forward income at an average yield of about 3.5 to 3.6%.
Keep building that position. Keep it going. I mean,
But
get to that target.
Let me hear this actually, because there's still one massive investment you made last week.
Yeah, at the end of the week again, this was a Friday special here.
Friday special, Black Friday.
No, this one was, I just want to keep growing my position in this stock. And it's funny because it has a really high share price. So the shares are small, but the position is building up quickly. We grabbed some more shares of Lockheed Martin, ticker symbol LMT. Laney when I talked about how we added to watch list last month when it was in the low 330s. The stock price is kind of hung tight as it keeps falling down. I will continue to buy Lockheed Martin a share or two here or there as it remains in the low 330s, and that's exactly what we did. We grabbed 2 shares of Lockheed at $332.39 per share, a total cost of $665, adding $22.40 of income with a yield of 3.37% on the purchase. Now we own a whopping 6 shares of Lockheed Martin. I'd love to get that up to 10 in the near term, though.
A lot of shares, building that position, dividend growth stock, dividend growth rate high for them. You got well over 10% in that combination factor, doling out $665 in the Lockheed Martin stock. Bert, nice job.
Thank you. So to summarize here, my wife and I added Johnson & Johnson, Lockheed, Unilever, and Intel. We put in $1,626.93 into the market, adding $53.08 of dividend income for a yield on purchase of 3.26%. What about you and your wife, Lanny?
Well, this is now at least your second week in a row breaking $1,000 in investing.
That is true. Yeah, we want to end the year strong. Start off 2022 correctly. I get those dividends rolling in there as fast as we can.
See if you can go for the trifecta this week, Bert.
We'll see. Let's do it. But what about you? All right, let's hear your amount.
So we invested $941.76, and we added $33.14 in forward dividend income at a nice average yield of 3.52%.
So more like Lanny, it's a consistent amount that you've been adding over the last few weeks as we continue growing our dividend income. So in total, we added combined $86 of dividend income between our families.
And over $2,500 in total money being put back into income producing assets as we're trying to each get to financial freedom, baby. So the question I have for you guys is, what dividend stocks did you buy that last week of November, beginning part of December? Leave it in the comments. If you haven't done so already, smash the heck out of that thumbs up, turn that sucker blue or black, whatever platform you're using, whether it's your phone or on the computer. Definitely subscribe to our channel if you haven't already. But Bert, what other parting words do you have for the community here?
Let's end the year strong, everybody. Let's keep pushing and make December count. Let's send these people off, Lanny. Let's go.
You got it, Bert the Hurt. That was Bert, and this was Lanny from the Dividend Diplomats. Over and out.